Boy, that time flies when you're hitting those profit targets, doesn't it, guys? Welcome back, welcome back. You know what time of day it is. I think it's about that time to get started. It's Wednesday evening. It's January 23rd. My name is Joseph, and this is your nightly newsletter. You know, I help traders every day earn consistent, reliable profits using a simple 3-step trading strategy that I teach and trade right along with all of our clients every morning in our trade room. And the goal tonight in this video is to identify the best opportunities setting up for tomorrow, Thursday's trading session. And we're going to cover crude oil. We got some S&P. We got some Nasdaq. How about some gold? And of course, we'll wrap up tonight on that mighty euro. Jumping in first tonight on the oil. Oil spent most of its day inside of a range, but after seeing these sellers now try once, try twice, we've got some great levels of support, and I'm looking for a specific pattern now to get this sucker with a nice short covering rally back up into that trading range. Over on the S&P here is a classic example of rejection. If you watched last night's newsletter, you knew there was some major support waiting down here, and we just see this big V bottom off of that major support. A classic example of rejection. We're going to talk about rejection in a lot of detail on tonight's video because it's a very, very big clue on the S&P. But most importantly, though, we've got the 1, we got the 2, we got the failure. The bulls have it, and we should be running back up into that bull target overhead. But before we get there, I'm going to find 2 easy ways to find some buying opportunities here, either on the pullback or on the short covering rally. We're going to grab that in just a moment. Over on the Nasdaq tonight, Nasdaq is very similar. We've got rejection off of that low right now into a 2-try failure now, and I want to try to grab that market before it rallies all the way back up, hit that bull target. Got a couple good options for us on the Nasdaq going into tomorrow's session. And then gold, range bound, double tops, double bottoms, falling resistance, rising support. We're balanced, we're range bound. It's pretty much par for the course on the yellow metal in 2019. And what that means is I want to buy low, I want to sell high, I want to stay out of that middle. I'm even going to give you a little short-term scalp, right, if you're in Asia and you want to trade some overnight stuff. So stay tuned on the gold there for more on that. And then, of course, over on the euro, well, we talked about this last night, didn't we, right? That hidden trend line. We knew we'd probably get there sometime, and here we are today. If you recall from last night's newsletter, this was what we were waiting for. Now, big problem, though, is we've got a little bit of bullish momentum. I can't sell into that bull momentum. I'm going to wait for a very specific variation of one of my favorite patterns to sell this thing back down to retest that big round number. That 14,000 big round number has my name on it, maybe your name on it tomorrow as well. Now, before we jump in and put all of these charts together, before we jump in and put the plan together, I want to make sure you never miss a video. So before we go any further, make sure you head over to our blog here at sidewaysmarkets.com. I'll put all the links in the description of this YouTube video, and make sure you join our mailing list. All I need is your name, a real email address, and then hit that subscribe now button. I'm going to send you a verification email. Make sure you get that verification email. That way you confirm you've got access to your inbox, and I'll send you an email every time we publish anything new here at School of Trade. So make sure you register for the mailing list. Oh, and one more thing too. Tomorrow morning, 8 o'clock Eastern time, we're going to be in our trade room with all of our advanced members. I would love to have you there with me. If you can't be there tomorrow morning in the trade room, not to worry. The next best thing is all of the charts from tonight's video. How easy is this? You can download all of those charts, have them ready on your computer. Tomorrow morning, right, is going to come before you know it. Get ready for tomorrow. Either join me in the trade room 8 o'clock Eastern time, or make sure you download those charts. There's a big button right below the video tonight on the blog. I'll also put it in the description of the YouTube video so you can grab those charts. And if you have any questions about anything we cover in this video tonight, drop me a comment in the comment section. While you're there, make sure you give me a thumbs up if you like the video so far. And don't forget, you can always call, email, use live support. I've got a toll-free phone number, and of course that live support tool in the upper right-hand corner if you have any questions. But again, drop those questions, comments, concerns right in the comment section below, and I'll make sure to get back to you as soon as possible. All right, let's roll up our sleeves. we got some work to do here, kids. Let's start off tonight by checking out the calendar for tomorrow. Tomorrow's Thursday, January the 24th. What do we have here on the schedule here for tomorrow? Well, we haven't had a lot of major news yet this week, right? Monday was the holiday. Tuesday and, of course, Wednesday were kind of catch-up days. Yeah, we're going to catch up tomorrow, though. Lots of big news tomorrow. Mainly, the big news tomorrow in tomorrow's session is the ECB announcement at 7:45 Eastern Time. Now, this is a lot like the FOMC announcement, where 8 times a year, the Federal Open Market Committee of the U.S., well, this is the ECB, right? The European Central Bank. They're going to announce their maybe rates going up, maybe rates coming down, their monetary policy announcement tomorrow morning at 7:45. Now, in my experience, this, of course, won't be every time, but most of the time, though, markets like gold and euro are really challenging in and around this announcement. Now remember, it's just like the FOMC announcement, where there'll be the announcement at 7:45, and then our boy Draghi will take the microphone around 8 o'clock, 8:15, and he'll usually be speaking until about 9:15, sometimes even 9:30. So this is not your typical news event tomorrow. It's a big boy, right? Or big girl. It's a very big deal. It's just like the FOMC announcement we get here in the US. Most important thing you want to remember for tomorrow is, if you're a gold trader or a euro trader, right, which we love to trade both those markets in our trade room, be very careful tomorrow between that 8 o'clock and 9:30 window. It's very common to think that once the announcement is behind us, then it's safe. It's really not. The real action, the real volatility, the real craziness happens when Draghi starts explaining to all the reporters in the unscripted press conference that follows shortly thereafter. So, of course, tomorrow we'll be tuning in. We'll be opening up tomorrow, 8 o'clock Eastern Time. We'll have a front row seat for that. And of course, we'll make sure all of our clients have the plan put together tomorrow. We also have those jobless claims. Jobless claims they're not really that big of a market moving event. So I'm not going to worry too much about jobless claims. The other big news event you do want to be aware of tomorrow is that inventory report, 11 o'clock Eastern Time. Now remember, usually this is on a Wednesday morning at 10:30. So this, because of the Monday holiday, it's been pushed back a little bit more than 24 hours. And ultimately, I talk about this every time we see this. I like it like this, because you're pretty much going to have a full day tomorrow. This won't be too big of an impact, but just be aware, tomorrow, I would say around 10:45 Eastern Time, right? 10:45 Eastern Time. Let's start really paying attention to the condition of the market on oil, right? I'm not going to worry about anything else. If you're a nat gas trader, sure, toss it in as well. But this is really applying this to oil. So the rest of our favorite markets, the E-minis, the metals, the currencies, they're not going to be too big of an impact tomorrow morning around that inventory report. But if you're an oil trader, if you trade in the energy complex, you definitely want to be aware of that. And as of 10:45, I'm going to be done on oil tomorrow. We'll let that news come out into lunch, right? I like to get my money out of the market before we get to those news events for those inventory reports. Anything else to worry about there tomorrow? Not much more. That looks pretty good. We got the early morning news, that ECB announcement. So again, gold and euro, and then of course the petroleum status report for the oil markets, right? And of course, we'll make sure we provide all the analysis, all the real-time updates tomorrow morning in our trade room once we get there. Now, speaking of trade room, let's get some charts going up here this afternoon. Let's do this. Let's get some charts going, and let's start off here tonight. We got crude, we got S&P, we got Nasdaq, and of course some gold, some euro. We're going to be here partying together here for a bit here tonight. 3 big clues on the oil tonight. 3 big clues. One is bull momentum. Right? We see this real big 1, 2, 3 reversal, right? We talk about that quite a bit on this newsletter, right? A 1, 2, 3 reversal. We've got the 1, we got the 2, we got the 3. We call that a 1, 2, 3 reversal. Momentum is now bullish. Now, whenever the market moves, right? Whenever the market moves with that bullish momentum, what do I always do? I look for areas of support. So what I'm going to do now is I'm going to draw that next clue here, right? Get those clues up here, right? So first clue is that bull momentum, right? Market is bullish. Okay, second clue is that trading range. We spent most of our time today kind of rattling around this range. Now we're below the range. big strong move down. We have what we call a nested 2 try. Just a tip on this. We'll talk more about this on the euro later on tonight. We got the 1 try for the sellers, the 2 try for the sellers. At this point now, those sellers are most likely out of bullets, and now we're looking for that rally back up into that trading range. The trading range, right? Trading range tells me buy low, sell high, avoid that middle. So we're trying to buy low and go back up into that trading range. And then we know we have a bull bias, right? We know we have some bullish momentum. We know we have that trading range that'll want to drag that price back in. Where can I buy at a level of support? Great question. I'm going to look for a trend line coming off of that low. This will now give me a chance to capitalize on 1 try, on 2 try, and look for that buy now going back up into that trading range. So buyers have control. We're trying to buy this market going back up into that range. How are we going to accomplish that for tomorrow? Now, again, as I mentioned earlier, we do have that inventory report at 11 o'clock. So all of this, of course, needs to be done as early as possible tomorrow. Most important thing is we want to try to find a way to use a support level in combination with our favorite entry patterns to go back up into that range. And ultimately, we're going to look for buy patterns down in this battle zone, which we're conveniently in right now. And then if we do get the nice move higher, we're going to plan for some additional opportunities here on the pullback as well. So what's our first option here when it comes to buying on this move lower? Well, you'll notice this really strong move down. At this point, though, the market's already bullish. It's already got the 1, 2, 3 reversal. I don't think anybody at this point, right, is worried about these sellers. Now, we did just have the API report come out. That's what's led to this big breakdown. But we're right at the low of this hidden channel. We're right at the support trend line. I want to be a buyer here right now. So trying to be a buyer, what's the best way to buy after such a big, strong move down? Wait for the sellers to try twice. And I'm going to use my favorite patterns on this. It's called the 2 try failure pattern. Consider this big pullback the first try. We'll wait for another second try here. Usually it's right around that moving average. And I'm going to look for that buy now coming off the trend line, coming off the low of this channel. I call this a failure setup. Now that failure setup will get us in nice and low. After we see that market start to rally higher, then watch closely. I'm going to draw across that high and look for a pullback setup, right? So first setup is a failure setup, right? It's what we call a 2 try failure pattern. The second setup we're looking for is what if it goes higher now, right? I don't want to chase after it as it goes higher. I want to try to buy that pullback. And again, using support levels to buy as we go back up into that trading range. That will be our pullback setup, right? That'll be our pullback setup. Now, there's one more setup if we can pull back here. Another one would be if we go up and make another lower low. Now, watch closely here. If I draw that trend line down, I can use that trend line now as an area of support here, and I can buy off of that area of support. I call this a 2-legged pullback setup, right? A 2-legged pullback because you've got 1 leg and you've got 2 legs there as well. So we got failure pattern, right? Failure setup, pullback setup, 2-legged pullback setup, right? Now, what else could we do here right now? Well, what if this thing just keeps running, right? What if it just turns around and runs higher here? What if this thing starts to run? Then what do we look for? Trap setups, right? If this thing starts running hot here, right? If this thing really starts ripping, I don't want to buy high. What I'll do is I'll use that bullish momentum to look for a specific setup right below a prior swing. We call these traps, and I love to use traps whenever I have a nice strong momentum, but I don't want to buy high. So as the market's running higher here, I don't want to chase the market higher because we're going back into that trading range and there's going to be resistance overhead. So in an attempt to avoid buying so high, what I'll do is I'll buy low and I'll wait to buy with that little trap pattern. And again, you'll notice all of these are going to try to utilize, right, this trend line, right? We're trying to use this support area here because the market's bullish. I want to buy at support, buy at support. I just need to combine that support level with all the best entry patterns. Now, I've talked a little bit about these entry patterns, but I'm just kind of illustrating these patterns right now. I want to show you a lot more about these entry patterns. And to do that, to show you hundreds of examples from real charts of all my favorite patterns, what I'll do is I'll give you a free trading class in the upper right-hand corner. Grab that link. Not to worry, you can pause the video. I'll also put a big red button right below the video tonight on our blog. If you're here in the blog at sidewaysmarkets.com, check out that big red button below the video on the blog, or grab that big link in the upper right hand corner. Register for the free class. You'll learn more about my technical analysis, but most importantly, you'll see hundreds of examples of real patterns we find every day in our trade room. Now, how would this market turn bearish again? What do you think it would take for this market now to turn bearish? Well, honestly, it's going to take quite a bit for this market to really prove to me right now that it's ready to sell short. Because even if we do go back down to retest that low, that still will just be 1-2 for a major 2 try. So for us to really want to be a bear right now, I really got to think one of two scenarios. Scenario one's going to be we go up and we use the 2 try, which I'm going to talk more about this pattern on gold. So a big 2 try failure off the high will allow me to sell short, which we'll know more about tomorrow. That may not be an easy pattern tomorrow because we got that inventory report tomorrow late in the morning, and that's when that type of pattern would probably set up. We'll talk more about that strategy on gold in a moment, so make sure you stay tuned on that. That's one option to be a seller, right? But how do we go lower here, right? Because one of the things we're going to talk about tonight on the S&P, right, and the Nasdaq is this idea of rejection, right? If you recall, we had this big move down, and after that big move down, we went up, and now we're bouncing off of that low, clearly rejecting that low. So we know right now there's a lot of buyers here who will be interested in defending that low to prevent this thing from rolling over, right, and stopping everybody out. So the bottom line is we're going to have to go through that low on some serious strength before I can start looking at this as a bear market again. So again, 2 options to sell it. Either we've got to get up and then 2 try rule to get back down. We'll dig into that more in a moment. Or we've got to get down and really, really run through that level, which reminds me, right, we're going to talk a lot more about acceptance as opposed to rejection in just a few moments here on the S&P. So stay tuned for that in a moment. We got a good plan here on the oil for the buy side and the sell side. And again, be very careful trying to sell this oil if we do go lower, because we clearly saw, right, rejection off of that low. Let's keep that idea going. Let's keep talking about the word rejection here, because this is something that we see a lot right now on the E-minis. Let's go up on the E-mini right now, and this is one of the most important components of tonight's newsletter, and that is the term rejection. Let's talk about this for a second. Now, whenever we have a strong move in one direction, let's say we have a bear market, okay, anytime we see a strong move in one direction, we always know eventually there's going to be a pullback. That pullback will usually put us above the moving average. And one of my favorite ways to trade is to let those buyers try twice, which we'll talk about more as we go, and then sell right into their stops. Now remember, when we sell into those stops, right, where's the target? The target is back down to retest those lows, right? What do we call that? We call that the market's objective, right? Their objective is to get back down and retest that low, right? I want to sell high. That'll give me a good chance for a small amount of risk, much bigger amount of reward. But the most important thing is once we reach the objective, what happens next? Do we bounce? This is most common. Most common, we bounce. And if we bounce off of that objective area, we call that rejection, right? In other words, the sellers have rejected the idea of making lower prices, right? It's bouncing, it's rejecting. They're taking profit. Whatever you want to call it, I call it rejection. Now, whenever you see rejection on a chart, what does that tell you? What's really happening is it's creating a trading range. And anytime we have a trading range, what happens? We rotate back and forth inside of that range. So when I see rejection off of that low, when I see these bears basically reject the idea of selling new lows here and price rallies higher, I know where they're trying to go. They're trying to go back up to retest that high. And so that's a lot of what we're trying to do right now on the E-minis. The S&P and the Nasdaq have recently bounced off of that low. So did oil, right? Look at the bigger picture on oil. Oil came down yesterday, went up, bounced off of that low, and now we're trying to go back up again. So we're seeing rejection, and because we see rejection, we expect that market to rally back up, right, to hit the top of that range. Now, what if the market accepts the price, right? What if it goes through that low? Then what do we do, right? If it goes through that low, what do we call that? We call that acceptance, right? The opposite of rejection. Now, usually when we get acceptance through a major low like that, it usually ends up inside of a new spike and channel. And we usually end up finding a smaller channel and trading with a new channel, right, to find selling opportunities off of the high of that channel. And then there's usually a larger measured move, right? One leg, two leg, and we use that larger measured move to find that target. So the most important thing right now is, let's go back to our chart right now. Let's zoom out on this because you can clearly see what I'm talking about, right? Here is that strong move down, very easy to see, right? That big bounce up. We go back down, and what happens? Rejection, right? Absolutely rejected off of that low. Right? The bears don't, right? The bears, for whatever reason, weren't paying attention. They try to sell once, they try to sell twice, and now we're running, right? Now we have that short covering rally. Now the sellers are clearly on the wrong side of this market. And where do we think this market's trying to go? It's going to try to go back up. You got it. Try to go back up and retest that 26.53, 26.52 area, as we mentioned on that illustration. So now that you kind of know the idea here, right? Now that you know that rejection is a big part of this process, now let's go back in and let's talk about, right, those three big clues. One is that bull momentum. Right? The bears obviously did not, right? Obviously the bears don't know about rejection, right? Because they tried to sell it once, they tried to sell it twice, right? Nice little hidden channel there off that move, man. Oh man, I love that buy off those hidden channels, right? Wink, wink. That's what I'm looking at for oil right now, right? That's the same pattern that we're looking for oil right now on oil, right? That's a great example of where the oil may be in a couple hours from now. So bottom line is, we know we're bullish. When I have a bullish momentum, my plan is to find a level of support. Now, where can I find an easy level of support? That's a great question. Let's take these highs. Let's mark up those highs. There are three of them right now. Sometimes only two, right? So we'll use those highs. We'll draw that trend line across the highs. We'll bring it down to that low. That creates a key level of support, right? But we can do better than that, though. We can do better than that. How about we draw that same trend line now, and we bring it down to that major low? Ah, now we're talking. Now that's a deep pullback that I can sink my teeth into, right? There's some meat on that bone. I can take a small amount of risk for a large amount of reward on that type of trade. So I really like that hidden channel, right? That's my second big clue on this chart. Try to get that hidden channel coming in, that nice deep pullback. We might not get it. Hopefully we do, though. And there's one more support level here, right? And that is that trend line. Boy, oh boy, did we learn how valuable those trend lines are. If you traded gold today, gold was a great example. Came all the way back down to it and bounced. If you watched last night's newsletter, you're ready on gold for that falling resistance turn support. That's another support level, right, that we'd like to use for those buying opportunities tomorrow. So bull momentum tells me to buy at the lows or buy at support. I'm going to use that hidden channel, or try to use that hidden channel, right, in combination with my favorite entry patterns. And there's one more important thing here, though, right? That short covering rally. Now, we talked about short covering rallies last night on the newsletter, but remember, whenever you can easily see a big down move and then the market reverses direction, what's going to happen is you're not going to get the pullbacks anymore, because the price will just keep on going higher, right? Keep on going higher. So the moral of the story is, if we don't get that pullback right now, and if this market starts to kind of sleepwalk its way higher, you'll kind of see it, right? When a market has a short covering rally, it never pulls back, right? I'm expecting a pullback right now, so I can buy off of that low. But if the sellers who are in this move going lower If they didn't recognize the rejection, if they didn't see the 1-2, there's probably still some sellers here who are still short. And eventually, as this market keeps going higher, more of those sellers are going to be tripping their stops, and the stops get hit, and stops get hit, and stops get hit, and the price will oftentimes flutter higher. So if it does flutter higher here, what's the plan then? Remember, anytime I want to buy, but I don't want to buy too high, what patterns we look for? Traps. Look for that trap low and try to get it before we get up to that big bull target. Because remember, as we get closer to that 26.53, we'll call it 26.52 and change, right? As we get closer, we don't want to buy high up there. We want to make sure we buy nice and low. And again, to avoid buying high, find those traps, right? And buy those traps. You may also get a chance, right, to use a bit of a hidden channel off those as well, right? And we'll grab a kind of like a hidden channel there, or a reverse channel, and look to buy off of those lows. So we've got the basic idea for this now. What specific entry patterns do we think we're going to have to use on this? Well, really it comes down to, does the market pull back or does it keep going higher? That's pretty much what it comes down to right now, right? So the first scenario would be we pull back. Now, as we pull back, we've got that trend line, we got that channel line. Don't be spooked on this if it really pulls back, because we got that hidden channel down here, and that would just be delish for those bulls, right? So I want to see a pullback. I want to get that nice deep pullback, and then we're going to look for that 1-2 punch, right? That failure into pullback, right? That failure, that 1, that 2, right? Let those bears try to sell off of that moving average. That now tells me now where my stops are. I can buy into those stops. I can also wait to buy that pullback, right? Those are two easy setups as we get that deep pullback. One's called a failure, one's called a pullback. We may also see a two-legged pullback, one leg up, two legs down, draw that trend line over. I can use that trend line now. And again, trying to incorporate the falling resistance, the rising support to try to get this thing in really that sweet spot there. You know, we talked about confluence levels last night. That would be one example of stacking support on top of each other to increase our odds of success. What do we call that pattern? That's called the two-legged pullback. It's a very simple pattern. As long as we got that trend line, we can easily define, right, as we are coming lower. Now, one more thing here. What if we go sideways here, right? What if we end up sitting here sideways tomorrow, right? Double tops, double bottoms, the moving average flattens out on us. What if we go sideways here? If we go sideways, take the size of that trading range, copy and paste it down. That'll find some more support. And then we're going to two-try rule, right? Anytime we have a trading range, we look for that two-try failure pattern. Once, twice, let them try twice to break free of that range, and then we'll buy right up into those stops, right? Once those sellers start to fail, we'll buy into those stops and look to ride this wave going higher here. So if we go sideways, keep an even keel, keep your motion under control, to buy that pullback using that two-try pattern. And then again, if we do go higher here and we start kind of sleepwalking or fluttering higher, right? You'll know what I mean when you see it. It has that very distinct personality to it. And if you don't know what I mean, that's a great example of a situation you want to come into the trade room and watch it with us, because we'll help identify these, right? These short covering rallies. Short covering rallies are difficult to trade at first because they're not going to give you deep pullbacks. You're going to have to basically see the situation happening and adjust your strategy to be a little more aggressive with it, right? And you can buy with that trap low if we keep going higher there, right? And again, there might be a hidden channel here we can use. I'm always going to try to find those hidden channels to buy off those hidden channels as well. So that covers us, guys. If it goes up, if it goes sideways, if it pulls back, how would this market turn bearish though? Well, again, we already know we get that big rejection, right? That big rejection off of that low. So just going back to retest that low, is really not going to be enough. We're going to have to push through that low on some really good strength before we start thinking about being a seller in this market. Another thing you might think about too is we go up, we finish off the bull target, and then we'll look for that nested 1, 2, and sell back down, because that could definitely be the case tomorrow, right? Kind of the opposite of what we saw back here, right? There was that big move down. The bears tried once, the bears tried twice and back up. Well, now kind of flip the script, right? If we go up, The bulls try once, the bulls try twice, right? And then we can look to sell this back down. And we'll talk more about that pattern on the euro in just a few moments, because the euro is setting up on a silver platter for that sell off the high right now. And again, don't forget, I'm going over this relatively quickly tonight. I want to make sure you get the most out of tonight's video. If you want a real deeper dive into all of these patterns, into all of this analysis, grab a copy of that free trading class. It's free. It'll give you an all-access pass behind the scenes in our member section here at School of Trade. There's a big link below the video tonight on our blog, and of course the link is in the upper right hand corner. Let's keep going. Over now to the Nasdaq. How's that Nasdaq doing? Nasdaq's almost identical right now to that S&P, because again, as you can see here, as I kind of zoom out here a little bit, right? Make sure to keep my ugly mug in the picture there. Get those out of there, right? We had that big strong move down, that bounce up, right? Buyers fail, and we go back down to retest the low. That's exactly what we described in the introduction, right? Well, look what happens down here. Is that acceptance or is that rejection? That's rejection. So now that we see that rejection now, right, once we see that bounce and that rejection now, where do we think they're trying to go? They're trying to go back up to retest that high, right? This becomes a range, and we're trying to find our way in, hopefully before we get back up to retest that high. So now, as I drill down on this, right, three big clues. One is that bull momentum. Right? And again, that bull momentum, what does it tell us? It tells us to buy at support. Where could I buy at support? I'm glad you asked. I can draw that trend line off the highs. I can bring it down to that low. That's a great level of support. But you know me, though. I always got a big appetite, right? I want a little more meat on the bone. Let's create that little hidden channel there. Right? And then, hey, why don't we draw that trend line down overhead? And wouldn't that be a great spot right there, right? For this nice pullback and the buy off of that low. That would be a fantastic spot to be a buyer. But wait a second though, because we got that possible short covering rally. That short covering rally, we get the sellers trying once, they're trying twice, and everybody knows the deal now, right? Those bulls have now taken full control. But I'm sure there are some poor suckers out there that are still thinking this market's bearish, right? And they're going to hold on until they're forced to get out of their positions. And as we go higher, we'll keep hitting stops, hitting stops, hitting stops. And what happens when you get stopped out as a seller? You become a buyer, and that's why the market will kind of flutter higher, right? That's that one key personality trait of a short covering rally. A regular bull market will rotate back and forth, and you'll be able to buy nice and low. A short covering rally will not rotate. It'll be frustratingly stingy, right? It'll keep on running higher, and if I do get that run higher, again, I'm going to look for those traps. Just make sure, though, that you get this before we get back to that 67.24 and change area, because that's the objective. That's where the buyers are trying to go. And then who knows? From there, late in the session tomorrow, we may find ourselves 1, 2, and right back down again. There's really no, right? There's no reason why we can't buy off the low and then sell off that high. Only time will tell at this point. So really at this point, the big thing is, do we pull back? Do we go sideways, or do we rally higher? If we get that pullback, obviously, if we get that pullback, we're going to look for that combination, right? We'll look for that combination, that failure into pullback combination we talked about, right? Failure into pullback at that moving average, right? Because that's the trick. The trick is to get those sellers try to sell off of that moving average, right? Just like we saw back here, right? Let those bears try to sell off that moving average, then look for that pullback as we go from there. It's just pattern everywhere. It happens all the time. So once we get those sellers to fail, right, we'll buy into the stops. Then we're not going to want to chase after it as it goes higher. We'll look to buy that pullback instead. So again, it's a failure pattern, right? It's a failure pattern. It's a pullback pattern. Those are easy patterns there. Another one would be the two-legged pullback, 1, 2, and then use that trend line as support. And remember, we've got that kind of hidden trend line coming in there in combination with the low of that hidden channel. That could really line up for a great pattern to buy off of that low. Also, don't forget too, if we do end up going sideways up here, it happens to the best of us, right? Even the Nasdaq goes range bound every once in a while. If we start seeing double tops, double bottoms, moving average starts going sideways, right? If we start seeing that range bound market form, what do? two try failure pattern, one try, two try, back up. And again, right, I can still try to combine those levels of support. There's nothing wrong with, once a market goes range bound, continuing to use those levels of support, just waiting now for those sellers to try once, try twice, and then we can look to buy right into those stops. Short covering rally, buying into those seller stops. And again, hopefully getting this thing up to that bull target on the runner. Sorry about that. The last piece of this puzzle, last piece of this is, if we keep going higher, right? If we just keep fluttering higher, we don't pull back, we know that tells us short covering rally. Again, we'll look for, right? We'll look for that hidden channel. But more importantly, though, we'll try to get that trap, right? That trap. Again, anytime I see the market fluttering higher like that, or anytime I see a market that is blatantly kind of like a runaway and it's not being rational, I know I'm going to have to be aggressive with it. When the market gets aggressive, I've got to get aggressive with it. And that'll be a good example, right, of it on the Nasdaq tomorrow. And then, much like I talked about in the S&P, be very careful trying to sell this thing as it goes lower. It's really going to take, really the only two ways I want to sell this market right now are going up and then one try, two try back down. We'll talk about that pattern in a moment here. Or we've got to clear through this area, right? We've got to get through it and keep going. It's not going to be easy. It's not going to be easy. This much rejection off of that low from yesterday around that 66.10 area, it's not going to be easy to convince sellers to want to sell into that low again, right? Because clearly all that movement down, somebody didn't know what rejection's all about, and they sold right into that low right there. I mean, that's a blatant mistake. Whoever sold that pullback clearly does not have any more data, because if they looked literally 18 hours before, they would have noticed that's a rejection right there off that low. Selling into that low is it's suicide, right? It's trade suicide. So anyways, it's gonna take a lot to convince those bears to try to do that again, I would assume, right? I would assume. Okay, so now we know more about the Nasdaq, right? We got the S&P, we got the crude. And again, if you want to learn all about this strategy, grab that free course in the upper right-hand corner. How about some gold now? Okay, got a couple long-term ideas on gold. But I got one short-term trade for you too, if you want a little bit of danger, right? If risk is your middle name, right? If you like wooden roller coasters and looking over the edge of the Grand Canyon, right? You'll love this. You'll love this short-term scalp that I'm watching for right now on the gold. But most importantly, three big clues, right? What is the first clue? The first clue is momentum, right? It's not difficult to tell. That is some pretty strong bull momentum we got going on there. And with that strong bull momentum, let me just adjust these things here real quick. With that strong bull momentum, right, we know that we want to find a level of support. Okay, now with that level of support, I'm going to mark up this hidden channel. And one very small little window here for another leg higher, a little buy off that low, right? So a little bit aggressive, because obviously you're right in the middle of that range. And obviously, this could just keep going lower here. We may not get the setup. But if you're in Asia, or if you're in London, or if you're just staying up late in the United States, right, that might be an option here we may get here. I'm going to talk about that in a moment. That is the bull momentum. Anytime I see a strong move in one direction, I do expect to see another leg going higher. And so I'm going to look to capitalize on that, right? Wouldn't be a bad idea for you as well. But let's be honest, right? The big tool here is, the big clue here is the trading range. We spend most of our time, we go up, we go down, we go up, we go down, we go up, we go down. Where's the overlap? Overlap is right in the middle. One of the hardest things to learn when you're a rookie, at least it was for me, was learning how to trade ranges. And the first thing you got to do is find the right range. Once you have the right range, then are there any biases? There's no directional bias, pretty much flat right now. Once you've got that, then you add your expansions, right? So I take my trading range, and I'll teach you more about how to find the right ranges as part of that free trading class, which I talked about in the upper right-hand corner. You'll love the whole chapter on trading ranges inside of that free trading course. But once you've got your initial range, right, then take it, bring it up. That creates resistance. Bring it down, and that creates support. You can see here, right, they're coming off of that major support. Haven't hit the major resistance yet, but I'm assuming that will be hit sometime tomorrow as well. The last thing you want to do is, once you've got your range, You've identified any directional bias, which there isn't any right now. You could say it's a little bearish because of the move before that. But the most important thing is not that, right? Not much direction to it right now, right? We add our range expansions. That's number 3. And the last thing you want to do is, when it comes to a range, is focus on what we call the 2-try failure pattern. Now, I know we talk about this quite a bit on this newsletter, but ranges are really where this pattern shines, right? It really is where this pattern shines. For example, right, as the market goes lower, I want to let those sellers try once. I want to let them try twice. And once I see that first into second try here for those bears, I'm going to look for the buy going right back up into that range. Now, once we get back up into that range, we might not get a full 1, 2. We may get what we call a nested 2, which would mean we see a shallow 1, another shallow 2, and that's another opportunity. In fact, that's one of the patterns I'm expecting to see on the euro. And you can see they're very similar, but they're very different, right? For example, the major 2-try has 2 major legs to it, 1 and 2. Right? It oftentimes creates double bottoms or lower lows. Okay, that major 2-try, I'm going to buy once I see that second try, and we'll try to go back up into that range. Now remember, one of the things about a trading range is you want to stay away from that middle, right? Stay away from that middle. So I really don't want to trade the middle of the range. It's usually going to be a lot more chaotic in that middle. So what I'll do is I'll skip the middle, right? What I was going to do is try to get in long below the range, try to keep my targets at the high of that range, and just kind of let this thing dance around that middle. I try to stay completely out of that middle and just try to get it to kind of push that middle and take my profit on the opposite side of that trading range. Now, once we go to the opposite side of that trading range, oftentimes we see such momentum that we're not going to get a full 2-try. And what we do is we end up seeing a nested 2-try. In other words, as we pull back, we don't see a full second try here. What we see is we see these shallow moves, right? We see 1 shallow try. We see 2 shallow tries. Okay, we saw a great example of this earlier on the oil, the S&P, and the Nasdaq as they rejected off of that low and they kind of went back up into that range, right? If you go back and look at the early part of this video. So if I get that nested 2-try, I can then look for now the buyers try once, the buyers try twice, and now I'll sell right into those stops. Because once I see those buyers try twice on that pullback, once and twice, now I know the buyers are loaded up, right? Now I know all the buyers should be in, and more importantly, they should be running low on ammunition. And once I see them fail, I can drop that sucker back in. So those are the 2 basic patterns I'm watching here for tomorrow. 1 try, 2 try, back in, or big strong move, 1, 2, shallow, nested, right? Or 1 try, 2 try, back in, or big move up, shallow 1, shallow 2, nested, back into that range. Stay out of the middle. Now, speaking of the middle, right? That brings to the last clue here, hidden channel, drawing off that low, drawing off the high, right? Up off that low. That's a beautiful level of support. But please, I hope you're yelling at the screen right now saying, but what about the range? Are you sure you want to buy the low of that channel? This isn't a trending day, right? Channels are best for trends, not for ranges. In fact, one of the things I probably make my clients sick of hearing is when we have a range day. You probably have heard me, right? Yelling all the way from Los Angeles. Stay away from those channels. Right? When we have a range-bound day, what's most important? Ranges. But like I said, if you like to live a little bit on the edge, right? If you like some scary stuff, you want more risk, and you want maybe some short-term action, anytime we see a strong move in one direction, we're usually going to see another leg higher, right? And that will complete the 1, 2 before we start looking for that move back down into that range. Okay? So what would that look like? Well, what I want to see is I want to see that classic failure into pullback combination, right? Same pattern we talked about earlier, that failure into pullback combination. So if I zoom in a little bit closer on this, right, as we go up, we pull back. I want to see that moving average come over. Let those sellers try to sell off the moving average. Once we see them sell, then we can buy into their stops. Do not buy high though, buy the pullback, right? And that'll be from there. Now again, these are not going to be as reliable because look what you're doing. You're buying towards the high of that range. So keep it close to the vest, smaller position size. If your normal position would be a 4 contract trade, make this a 1 or a 2 contract trade, right? Very small position. And that's what I always recommend. You're more than welcome to take these kind of, 60-40 trades like this, but just make sure you're not loading the boat, right? Make sure you've got only a partial size of your normal position. Last thing here, how do we break out? What does a breakout look like? Well, remember, take the original trading range, copy and paste it up, copy and paste it down. So how do we know when we have a breakout? We've got to get through that range expansion. What that will look like is it'll be a 1, 2, 3 breakout, right? 1, 2, 3 breakout. First is that move higher. Second will be a pullback to the moving average. And third, be that breakout as we go. Now, what do we do from there? From there, I'm going to mark up my new hidden channel. And you know it, I'm going to try to buy the pullback to low of that channel. Because if we do see that strong breakout, I have no problem buying, but I want to buy at a level of support. And by the way, the same thing happens, right, if we go lower. Okay, the only difference about going lower, right, is that we have that rejection down here. So it's going to be a whole lot easier to buy this thing going higher than it will trying to sell down here. Because once again, we see a good example of rejection, right? And so we know this big range, it's exactly what we talked about at the beginning of today's lesson. Let's keep going. Now you got a good plan for the E-minis, the oil, the gold. Let's wrap it up here tonight on that mighty euro. Now, not a lot has changed on the euro. As we talked about last night, it has been relatively low volume, chopping around inside of that range. Now we see that big break higher, okay? There are 3 big clues on this chart. The first clue is bull momentum. That's a pretty strong move higher. I'd be foolish just to try to sell this thing right now. At the same time, though, I don't exactly want to buy this either, because as we mentioned in last night's newsletter, if you look closely, this is one of those classic situations of a hidden trend line or a hidden channel, right? I've got some levels up top here, and you can easily see everybody is loving on that level of resistance. So the problem is I've got the top of this channel here, and I'm expecting this market's going to want to rotate back down to the low of that channel. Okay, so there's 1 clue, there's 2 clues, and of course you get that trading range. You know what's going to happen, right? 1 try, 2 try, back into that range. This is exactly what we just talked about for the gold, right? So a lot of things are telling us to sell right now, right? The big channel tells me to sell. The trading range tells me to sell. But this one big red flag, or maybe it's a big green flag, right? It's a big move higher. Lots of green there on that chart. I don't want to just sell into it. So what do we do when we want to sell, but we have too much bullish momentum? What do? We look for the nested 2 try. That same idea we talked about on gold just a few moments ago. Strong move up. Yeah, I'm looking for that 2 try here, right? That'll give me 1, that'll give me 2, and then we can look for the sell back down. But let's be honest, right? This euro has been tied to a cinder block and tossed in the river, right? It's been nothing but bearish lately, and so we expect those buyers to struggle. I'm going to let them try once. I'm going to let them try twice. And once those buyers show me they've tried twice to keep this party going higher, then I'm going to look to sell right into those stops. Now, you notice I added this green line on here because remember, like I said earlier, whenever I have a lot of momentum and I don't want to buy high, what would I do? Traps. So you've got to assume that there are buyers here. And this is one of the things that I really add a lot of value in our trade room, right? As a client of mine, we'll do this together. And one of the things I'm always kind of reminding my clients is that anytime we see a strong move, you've got to be thinking there are going to be traps down here. So instead of trying to sell into those buyers, we need to let those buyers have their way for a little bit of time. So once we fail, then we can sell into them, right? I don't want to sell, right? I don't want to sell into an area where I know is just infested with buyers. What's going to happen is it's going to run me out. Okay, I don't want to do that. What I want to do is I want to wait for those buyers. And again, my vision is let them try to buy that trap. then I know exactly where your pain point is, and I'm going to sell right into that pain, right? I'm going to find that wound, and I'm going to smash it, right, with my sell button. That sounds really aggressive. I apologize for the imagery there, right? But that's what you're doing. You know, unfortunately, that's where the best market moves come from, when you've trapped the other side of the market, right, and they're stuck. So as we go higher here, again, I get this big channel. I want to sell the high, going back into the range, going back down to retest that big round number. It's too much momentum. I want to see them try once. I definitely have to make sure they try one more time below that trap area. Be very, very careful. And then from there, I'm going to use that overhead resistance, and we'll try to sell right down, right? Literally, once we see that signal from there, it's on, right? And we'll sell right into those stops, and usually this thing will collapse. Now, just like a short covering rally can really run higher, right? If those buyers now, if they end up getting smoked on this and this thing rolls lower, right? It could get really aggressive as it goes lower. So what's the other option? Trap, right? Trap, right? Sell those traps. So it works both ways, right? We just recently have had a lot of short covering rallies, and typically a short covering rally is more aggressive because the sellers don't care about what price to get out. At this price here, though, if we get those buyers to try once, we get them to try twice here, this thing could tank, right? Could really get aggressive as it goes lower. Look for that trap and finish that sucker off down to that big round number. Watch that big round number, the 14,000. The euro loves those big juicy round numbers, and I expect that to be where it's going to want to go. Now, how would we turn bullish? Okay, I put myself on the spot last night and said it was probably not going to happen, but how do we turn bullish tomorrow? One more leg. It's all we need, right? All we need is one more strong leg here, and this euro is poof. Goodbye for the bears, hello for the bulls. That way we have that 1, 2, 3 reversal. 1, 2, 3 reversal. Now, what do we from there? We mark up the high, we mark up that high, we find that new hidden channel, then what? Wait to buy the pullback. Wait to buy the pullback. I know it stinks. I know I hate waiting too, but guess what? Waiting is one of the biggest parts of the trading business, right? There are so many parallels to fishing and trading. Right? What's the best way to catch fish? Know the best places where fish hang out, right? And wait for them to bite the hook. That's all we do, right? We know where the best time is to find the trades. It's gonna wait for it, right? You can motorboat all around all you want, right? But you're wasting your time. Sit tight, wait for those patterns. I know it's not fun to wait, but waiting is part of that business, and that's what makes a successful trader. Boy, speaking of successful traders, man, I really love being with you guys here every evening on this nightly newsletter. But another evening comes to an end, so we'll get out of here right now. Before I wrap up with you guys, though, thank you so much for watching. Don't forget, we trade this strategy together every day in our trade room. Check out our beginner, intermediate, and advanced packages here at schooloftrade.com. I'll put all the links in the description of the YouTube video. And don't forget, I got a great free pass as part of that free trial. Come on, join me tomorrow in the trade room. And of course, if you have any questions, you can always pick up the telephone, call that toll-free phone number, use that live support button on the right-hand side, and I'll plan on seeing you tomorrow morning in the trade room, 8 o'clock Eastern time. If not, we'll do it same time, same place tomorrow night. My name is Joseph. Hope you guys enjoyed the video. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.